about another part of the market that hasn't been going really well right now, and that's the metals, particularly copper. Now, many traders have been exiting the market since last week's election. Our next guest says that could just be part of a panic selling spree, and that there is a possible metals upside trade coming up. So joining us right now is Phil Strebel. He's, at least right now, the chief market strategist at Blue Line Futures. And Phil, let's take us through the trade for metals. It's not just the precious ones. Gold's been on the decline, silver. A lot of that is being attributed to at least dollar strength, which tends to put a damper on dollar-denominated commodities. Is it just dollar strength, or is there something more at play here?
I mean, it's been a big picture. We've seen just a burst of volatility and a recalibration of prices. I mean, the traditional core drivers, supply, demand, consumption, and speculation, they all had to take into account President-elect Donald Trump, as well as digest China's latest stimulus pledge for new price discovery. So it was not only copper, but many of the metals, they are under pressure, and the markets tend to overshoot. You take the election implication, you've got under Section 232, the president can implement tariffs just by using an executive order. So previously in January of 2016, we saw tariffs on solar panels. We saw it on steel and aluminum. So you look at the dynamics of the tariffs, they drive the dollar higher, inflation expectations rise, yields rise, and what is that trickle effect? Lower gold, lower silver, and lower copper. So if you take the positives real quick, you look at China, they are the largest importer of copper. Last week, we saw their copper imports reach 500,000 tons. That was the first time since May. Their exports hit a 2-year high, 13% year over year. So really the wild card is, buying the dip and doesn't make sense. And we think that the communication between China and President Trump has been mostly positive, and they do maintain their 5% real GDP growth target for 2025. I think that they're taking a bit of a wait and see approach. That's why I think you be patient. You look to buy the dip on some of these commodities.
So what is the trade there? How exactly would you go long copper in this case?
Yeah, so looking at it now, historically, copper has rallied. If you look at the March contract from Thanksgiving to New Year's, about 13 out of 15 years, construction industry replenishes supplies. But the trade itself, when you're buying a declining market, it's essential to get the position sizing right. So the December micro copper, every 1 penny move is $25. So we're looking at buying it on a dip to 420. Putting it a stop in at 410, that's a $250 risk, and we're looking at a target back up to 450. That reward there is $750.
All right, there's the trade on copper in the micro futures, allowing at least a little bit more access and liquidity. Phil Strebel, thank you very much. We'll catch you soon.
Thanks a lot.
Dom, what's interesting to me about